Today, I just want to go through with you um, one, just one question in this paper. This paper was written in June this year. That is for financial reporting to those that are just doing FR, Chartered Accountants. This is going to also benefit even those that are doing DA. So let's just actually look for one question in this paper so that we get to solve it together. All right. So due to time, I wanted to pick consolidation, but now consolidation is let's come to, this is question, this is cash flows. So let's do it. It is also here. It is also reaching here up to here. So the requirements is saying, the requirement is saying, machine where, this here, prepare Mwiza PLC statement of cash flows for the year ended December 2022 in accordance with the requirements of IS 7 statement of cash flows. Workings must be clearly shown. So as you can see, the workings here are not that much. Starting from here, are not that much. So we are going to solve this question. The only adjustments, the notes that we are having here are just 1, 2, 3, up to 4 for this PPE schedule. So now let's not waste much of the time and deal with this question. So now let's come here. Let's do our workings here. Workings. So let's even put our note. Just say all workings are presented in thousands. This is Zambian Kwacha. So let's start with the workings number 1. Workings number 1, as you can see here, the first adjustment that we've been given here is saying during the year to 31st December 2022, plant had a cost of 400,000 kwacha with carrying amount of 175,000 was sold at a loss of 25,000. So here they are directing us to see the PPE schedule, which is here. So now, just from this, when you just hear them saying it was sold at a certain amount with a certain carrying amount, I mean it was sold at a certain amount with a certain loss. So now what we are going to do is just find the proceeds on that disposal, the cash which is to be received on that disposal of the asset. That's the first workings. So that is cash on disposal of plant. Cash on disposal of plant. This is our first workings. So we are going to start with cash proceeds. Cash proceeds there, then carrying amount, and then the loss. So now according to this, remember this note is saying that all workings are in thousands. All workings are in thousands. So what we're going to do is the carrying amount that we are having here, it has been given to us. When you read this statement here, is saying that this plant had a cost of 400,000 kwacha with a carrying amount. The carrying amount is what? 175,000. So that carrying amount is the one that we're going to put here, 175,000. All the workings are in thousands. So then the loss that we've been given it here. It was sold at a loss of 25,000. 25,000. So you come and include here 125. 125. So what we are going to do for you to find the proceeds, just find the difference here. You're going to say 175 minus 125, so that it gives you, that is, I mean, but this is 25,000. It's not 125, sorry. So it's 25. So the disposal is 25. I'm pretty sure you can see it here. It's 25,000, which is here. So that is what we are going to do. So we find the difference here. There are 175 minus 25, giving us 150. So 150 is our cash, the cash proceeds. So this is going to go under investing activities. This one, the loss on disposal, is going to go under operating activities when preparing the cash flows. So now we are done with the first workings. Let's come to the second workings. The second working, what is it actually asking us? It's saying land land kept for future development was revalued in the year. The company also paid an interim dividend. So here they're just saying that the land was actually revalued for future development in the year, and then also dividends were paid. So we can still calculate the dividends that were paid. So let's determine the dividends paid. Dividends that were paid. Okay, this is our second adjustment. That is our second adjustment. So what we're going to do here is you go in the statement here. As you can see, there is in the statement here it is saying that the retained earnings, you are seeing that. So the retained earnings here, they are here. The retained earnings at that date. Am I actually picking the correct figures here? Yeah, exactly. So the retaining earnings, they were 128 in the last year, 128.95. 28.95 and 14.20 in the previous year. It was 14.20 because this is 2021, that is 2022. So this is retained earnings at start, this is retained earnings at end. So you simply just pick that up. You just say retained earnings at start, and then you retained earnings at start. We have that was 14.20. Network is becoming bad. Profit for the year in the statement of profit or loss. So when you come here, you can see the profit for the year. The profit for the year is this one. That is 3,100, which has been given. So you simply pick that one up and include it here. 3,100. 28.95. So the retained earnings at end 28.95, you remove it. Then let's determine the dividends that were paid. Vested dividends paid is okay. Now just say 1420 plus what is the 3100 minus 28.5. The answer is, that is 1625. Those are the dividends that were paid. So after finding that, let's go to the third workings. Here there's a note again here which is saying the opening balances on the trade and other payables include amounts owing for interest at start of 120,000 and the corresponding closing balance at the end of 150,000 for the year 2021 and 2022 respectively. So the one that was at start was 120 and the one that was at end was 150. These are interest figures. So these interest figures are included in payables figures. So we have to remember removing them from these figures when we're going to account for trade payables and the cash flows. So having given us the opening balance of interest and the closing balance of interest, we have to calculate for the interest paid. Interest that was paid. So interest paid. This is interest paid calculation. So we have, what is the balance brought forward for interest? The balance brought forward, we've been given it. It's 120 in this statement, 120, and the closing is what? 150. So we come here and put 120. That is the opening balance. And then we have to remember the profit or loss figure. So the one that is in the profit or loss, that we are having is the interest on the 750 is the finance cost. So it's the one that we're going to include here, 750. So remember, we have the closing balance of 150 for interest. So we remove it so that we come up with our figure that was paid. So 120 plus 750 minus 150 is giving us 720. So this is what was paid. And then workings number 4, we can actually write it here. That is, since we are done with some of the adjustments here, some of them we are done with it, but we have to remember to calculate for taxation that was paid. Taxation, even though you have not been asked, you have to calculate for this. Taxation paid. So taxation paid. And then the balance brought forward for taxation. We have also deferred tax here, and then the open balance also for current tax is going to come here. And then we remember the profit or loss. Let me just say P&L, the profit or loss figure, which is going to come here. And then we are going to remove the balances carried down for DT, deferred tax, and current tax. This is how it is going to go. So let's find the figures here. So current tax is here, current tax at end is here, at the beginning is here, 645 at the beginning and 320 at the end. And also we have, there is a deferred tax, we have 120 and 165 at the beginning. So we simply pick those figures up there. So at the beginning we had a deferred tax of how much? That was 165. And then at the end, at the beginning, current tax was 645, and then the profit for the P&L, you just go in the P&L there, you go get the income tax expense, which is here 2105. You simply come put it here, 2105, and then the closing balance figures of the deferred tax and the current tax, we have them here, this 320 and also 120 there. So deferred tax, that was 120, and then 320 current tax. So these ones, we remove them. We remove these ones. So now let's find our total. We say 165 plus 645 plus 2105 minus 120 minus 320, which is 2475. That was the taxation that was paid. So the last thing that we have to do now is to prepare the PPE. So when we've been given the PPE schedule like this, you can actually account for them separately if you know for sure that the PPE is going to confuse you a lot. So we have the land, we've been given the land and buildings figure there. So that is PPE. Land and machinery here. So for land and buildings, the balance brought forward for land and buildings, as you can see here, we are calculating them at carrying amounts. So it's here, the balance brought forward here, it's 2075, and the closing is 4225. So you come here now, and then balance brought forward that we are having is 2075, and then we never had any revaluations, so the balance carried down we had, that was 4225. So now we can see that this one is bigger. It is going to come also here if we want to balance faster, 425, and then you find the difference just there. Just say 4225 minus 275, that is 2150, which is these are the additions, so which means there was land and buildings that was acquired, and then here balance brought forward for this, we have it here, the balance brought forward for plant and machinery. There's this one 1650 and 2570, 1650 and 2570. You simply bring them down here. The balance brought forward is 1650, and then you just leave a space there also. Balance that is carried down, we have the one that we have was 2570. Then we remember there was disposal of plant the disposal of plant here in the additional information. This plant, which cost this one, was disposed this amount. It had a carrying amount of 175. So that is the disposal figure. The asset which was carrying at 175, we bring it here. Then we get our totals. So we know this side is bigger. So we're going to say 2570 plus 175, which is 2745 and 745, then minus 1650. 1650 is giving us 10 and 5, which is another additions. So that means these are this figure purchase of PPE. The total is going to be, we get this one, 2150 plus we'll also get that 1095 to get the total that is going to be on PPE plus 150, which is going to be 3245. Okay, this figure is going to be under investments. And then we are done with all the adjustments there. Then the only thing that we have to do, since we are preparing a cash flow, then let's just have our last workings here. Let's determine the cash and cash equivalent analysis. The cash and cash equivalent analysis. So we have for 2021, 21, 2022, and then we have the change there. So 2021, we have the change, there, and then cash and cash equivalent and stats. Here we've been given here in the statement. So coming down here, we don't have overdrafts, only have this. So it was just straightforward. We just get the difference here. At the end, it is 1545, and at start is 1065. So in 2021, it was 1065. Then at the end, it was that is 1545. And then the change there, you just get 1545 minus 1065, which is 480. So this amount that we've gotten here, it's the one that we're going to actually, we have to find this figure here, the change, when we're going to prepare the cash flows just now. If we don't find this one, then it means that it's wrong. Alright, so let's continue with our cash flow statement. So the first thing, don't forget to write the heading, which it asked us to prepare Mwiza PLC. So you write here, well, you write here at Mwiza PLC statement of cash flows from cash flows for the year ended that is the 1st December 2022. Okay, so that is our heading, and then we present our currency here in thousands. Why am I presenting it in thousands? It's because the cash flow is also in what? In thousands, thousands of kwachas. Okay, so the first figure that you actually get here, the first figure to get is the profit before tax. Profit before tax. So the profit before tax figure which we've been given is here. This is the profit before tax, which is here, 5205. It is the one that we are going to record here, 5205. And then we have the finance cost, what we are supposed, this one we added back. The interest was removed, now we are adding it back. The finance cost. Finance cost. It was 750. So in our cash flow statement, we added back 750 right there. Okay. So remember, we had disposal, loss on disposal. So the loss on disposal in the adjustments there, even here you've seen the loss on disposal, it was 25. We know where we can find it. We can still find it in here, in this statement here, which is 25,000. So we just removing these zeros, we get 25 there. We add it back. 25. Okay. So there's the other thing that we normally add here. Is there any other thing that we should actually account for in here? No, because depreciation was not there, so that what was not given for depreciation for the year. So we're just going to go straight to the movements in inventories. Movements in inventories. So as you can see here, these are the inventories, and this is at the end, this is at the beginning, and you can see that there is a 4, so there's decrease in inventories here. You come and write the movements. Decrease in inventories. Decrease in inventories. At the end we had 2320 minus, at the beginning we had 1160. So we get the difference there, 2320 minus 1160, which is giving us 1160. So now, do you remove or do you add? Since there is decrease in inventory, it means that people are buying inventories and there is cash coming in. So we are only concentrating on cash. So it's an addition. It's a good thing to us. So we go to trade payables. Trade payables, you can see it's here, the trade payables, and then you can see there was a decrease. This is 2021 to 2022. There was a decrease, increase in receivables. So we come here, we write increase in receivables. increase in receivables. At the end, we had 1760. Then that was at the beginning. At the end, we had 2285. So we get the difference there in 2285 minus, that is 1760, which is giving us a 525. So 525 here. So since there was increase in receivables, it means that our credit customers were buying goods on credit. So we're going together with our goods and our cash. So that is a bad thing. That's the reason why this one has to go. And then we are done with this part. Then we come down here, trade and other payables. You can see the figure here. It was 2150, and this is 1940. So remember, in these figures of payables, there was they included interest that was owing for 120 and also 150 at the end. At the beginning it was 120, at the end it was 150. So now you have to remove it from the figures. The one that is at the end is removed from the one that is also at the end. The one at the beginning, 120, is also removed from the one that is at the end there. So now here, as you can see also, these figures actually show that there was an increase from here to here. There was an increase from 2021 to 2022. So we say increase in payables. So as you can see at the end there, we had 2150. Remove also the 150 of interest from it, minus at the beginning we had 1940. Remember also to remove the 120 of interest from it. Then let's get our total there. Let's get our total. That is 21. Just say 2150 minus 150. You close, you open. That is 1940 minus the 120, which is just 180. So 180 here. So this one actually operates in the opposite way. Receivables here, when they're increased, is a bad thing, but here increase in payables is a good thing, because there is no cash that is running outside there to go pay our suppliers, you see, no? But we have gotten goods on credit from them. We have not paid them yet, and those goods are coming in the business to increase the inventories. So it's a good thing. That's why it is added. And then now this is where, down here is where we rate our interest paid. Interest paid is in workings number 3. We just include the workings there. Workings number 3. This is the interest that was paid. So 720 interest paid. You remove it, and then taxation paid. That is still in that is workings number 4. Workings number 4, which is 2475. So 2475. 2475 there. It's going out. So now what else are we going to include in here? Okay, let's find our total there. So we start accounting for it. We're done with this. Actually here we didn't include, don't forget, because we've seen this is cash because cash flows are under three headings. This is cash flows from operating activities. These are the cash flows from operating activities. Let's get our total there. That is 5205 plus 750 plus, that is 25 plus 1160 minus 525 plus 180 minus 720 minus 2475, giving us a total of 3600, which is our net cash inflow from operating activities. So you can even say that the net cash here, which is received from operating activities or remaining. So let's come to the other heading. The next heading is cash flows from investing activities. From investing activities. Then here, there are mainly just two things that come here. There's the cash proceeds on disposal of plant. Cash proceeds on disposal of plant, we calculated it, the proceeds were there 150. So proceed, this is the cash, so it's an inflow. We are dealing with cash here. And then purchase of PPE, that is on workings number 4. In workings number 4, we found individually. We calculated the PPE, we found the additions to be this, and also we calculated for that one, the plant to be the additions to be 10, but I added them together here to get the 3245. 3245. You have seen, huh? It's purchase. It means that you are buying and cash is moving out, and that is a bad thing. So this was what was just here. So let's find our total there. 32, 45, 150. That is 3095. 3095. It's a negative because this one is bigger. So this is the net cash outflow from investing activities. So, or you can just say the net cash used in investing activities, which is that. And then the last heading that we normally have here is cash flows from financing activities. Then let's start with the share proceeds. Proceeds on share capital So here is what we do in the statement here on equity. That is where you are coming. Ordinary shares, we had 3,000, 1,000. So there was an increase of how much? There was an increase of, when you say 3,000 minus 1,000 here is 2,000. That is an increase of 2,000. So 2,000 plus, you come on reserves, revaluation reserves here. Revaluation reserves, at the beginning it was 1,200, and then at the end is 1,600. So you get the difference there, which is just a 400. So you add it here, 400. So the total there was 2,400. And then what else did we calculate for? You have to come here. You have the loan notes. The loan notes, as you can see, at the end is 1,700. At the beginning is 2,500. So it means that here there were no loans that were acquired. So we paid the loan. So paying the loan, that is cash actually going out. So here you say loan repayment. So the loan repayment here at the beginning was how much? At the beginning it was 2,500 minus, at the end is 1,700. So you say 2,500 minus 1,700, which is just 800. 800 was paid. So that is cash going out. And then we have the dividends. Here, dividends paid. That is workings number 2. Dividends paid are here. The dividends that we found for dividends paid is 16.5, which is workings number 2, 16.5, like this. Since it was paid, is cash going out. And this dividends paid can still be on operating activities. If you have not included it on operating activities, you include it here. If you have put it here, you cannot put it double. It's just once. You put it here. If you don't put it here, you put it on operating activities. It's all well. Okay, so let's find our total there, because these are the only things that we had. That is 2,400 plus, that is minus 8 minus 16.5, which is that is 16.5. That is outflow. 16.5. 25. Sorry, we have already even made a debt here, which is just a 25, a negative of 25 there. When you do your calculations very well, that is what we are going to get. And this is net cash outflow from financing activities of 25. Remember, this is 25. I made a mistake, but it's 25. It's 25. It's a negative of 25. Then let's find our net. At net cash and cash equivalent. net cash and cash equivalent. So we had a positive operating. The total there is 3,600 minus 3095 minus 25, which is 480. 480. So when you have seen that is 48, when you do all these, when you say 3,600 minus 3,095 minus 25, you are going to find the 480. So that confirms it there. 480, the change we found in the cash and cash equivalent analysis. That means that what you've done is the correct thing. So now we say, okay, we have actually accounted for it well. Then we say cash and cash equivalent at start. At start, we had, this is 1065. You come and put it here, 1065. And cash and cash equivalent at end, which is cash and cash equivalent at end. We have, that is 1545. So we are done with the cash flow, answering of cash flow. So thank you very much for everyone that is going to watch this video. I know it's just the beginning, like being on a live like this, but next time we're going to do better. We are going to do better so that a lot of people get to benefit and find the easiest ways of actually killing a question in an exam. I am going to actually do this. One more question on consolidation, where I am going to actually talk about the easiest ways to answer the question in the exam, as the time is normally limited, so that we get to answer them faster in the stipulated time. I'm going to do those questions, but I promise on actually improving on the way I present the work, because it's not really clear, but you just have to be patient with it. We are going to improve on what we're doing. Thank you very much for watching.